eventually, what I think is going to happen with Twitter is he's going to bring it back publicly later at a later date with a higher valuation. What's up, you guys? My name is Sam. Welcome back to the IPO Nerd, the best place to learn about new companies going public and how to invest in them. Today, we're going to do a little Q&A, guys. Just a little fun video. I thought it would be a good idea just to come on here and answer your commonly asked questions that most people that are not familiar with IPOs have in a daily basis. And I actually posted it out on Twitter. I posted it out on Discord, everywhere, my social media. Make sure you follow me on my social media. And I asked you guys, what are the most common questions you get about IPOs? Or if you have any questions about IPOs, to let me know, because I'm going to be answering them today. So before we begin, make sure you drop a like, subscribe to the channel. Shout out to Ben and everyone out there that's been a loyal supporter from the beginning of the channel. And to everyone that submitted a question. All right. So I got the top 10 questions over here that most people have about IPOs. I mean, not everyone is an expert, right? We all learning as we go. Even I've been doing it for 2-3 years now, and I still learn something new every day, right? So let's get right to it. Question number 1, what's the difference between a normal IPO and a direct IPO? A normal IPO, we also call it a traditional IPO, right? It's an IPO where private company issues new shares to the public, and they begin trading in the public exchange. Now, they use underwriters to promote, price, and create new shares. Because a traditional IPO uses underwriters, the company is pretty much guaranteed to sell a certain amount of shares, right? Because the actual banks, the investment banks, actually buy a few shares from them. We're talking about, 100 million shares or whatever. So in a good way, traditional IPOs is like a guarantee money, where a DPO that doesn't use any underwriters, they don't hire any underwriters, right? You're running the risk. Are the shares going to sell or not? That's one of the biggest differences between IPO and DPO. The second question I got over here is, what are the advantages of going public? Okay, so an IPO brings new money to the company. That's the biggest advantage that I can see. This money is used to grow the business without incurring much debt, to better compensate investors and employees, and to provide stock options and other kinds of compensation. Now, also, being a publicly held company can also make it easier to raise capital in the future, if need be, okay? And can make a company more appealing to vendors and consumers. Now, you got to remember, when you go IPO, right, you're joining an elite group of companies that, they got so big and so popular that, they go public. On the other hand, what are some of the disadvantages of going public? Well, you have the downside is that the public finances must be disclosed, right? So there's nothing can be shady with it, no shady investments or nothing like that, because the SEC is going to find out about it if they've been misappropriating the funds, right? And the preparation for the IPO could be expensive as well and time consuming, right? You have companies that spend months and months and months trying to IPO, okay? It's not just like overnight I decided to go public and I'm going to go ahead and list my companies. No, it doesn't work that way. You got to choose. Investment banks and underwriters are willing to take that ride with you, right? If you decide to go on a regular IPO, direct IPO, well, you just file for the SEC, just file your S1 and go straight into the stock market, right? But an traditional IPO takes a little bit longer than that, and it requires a little bit more money. When should a company go public? This is a good one. It depends on the company's need for cash flow and for liquidity, okay? A lot of growth companies, look what happened to WeWork. They run out of money to expand. They sign contracts that they can not longer fund. They run out of funding rounds or whatever. They need to answer back to those investors, right? So the best way to do that is to actually go public and offer shares of their company to, retail investors like you and I. So that way they can raise money, pay back their investors. Next question, guys, what must be filed with the SEC? A company undertaking an IPO process, right, is required to file an S1. And if you've been watching my videos for the last 2 years or so, I always go over the S1 on every single company that I cover, right? Also, this S1 or F1, if it's a foreign company, must be public through the SEC website. They call it the EDGAR database. Anyone can find it just with a simple Google search. The S1 has the company statement, the information about the company. It has all the financials. We're talking about income statements and balance sheets and cash flow statements and everything. So there are no secrets for investors, and this is something the SEC put in place to protect those investors, that are going to be investing in this new company that's actually joining the stock market. If you think about it, this company has not been proven, right? Unless they've gone public a few times, thinking about Krispy Kreme. But so it's very important that they file the S1 or F1. How is an offering priced? Well, an offering price is based on the company's legitimate prospectus, aka S1, and set at a level that will attract interest from general investing public. Okay, so depending on the company's financial, right, and the valuation, that's how they price their shares. So the more valuable the company is and the more money the company's generating, the higher the shares are going to be. If you look at Airbnb or all the other companies, when they went public, they went at a high premium. So it all depends on the company's revenue and the valuation. What do underwriters do? Okay, well, IPO underwriters are financial specialists who work closely with the issuing body to determine the initial offering price of securities. And they sell the securities to the investors, right? After they price them in, they put them out in distribution in the distribution network. So that's what underwriters do. And you have big underwriters like, Goldman Sachs and all these investing banks. They write down the price for the shares and they push them out to the public. And I tell you what, they go out depending on the hype, right? They can price them up really, really at a premium. So that's why IPOs are very tricky, and you got to catch them early, or just wait for the actual IPO pop to come back down, okay? Because sentiment and the rage and the FOMO will come back down, and the prices will level eventually. Now, if you've been investing in IPOs for the last couple of years, it has not been a pretty sight, I can tell you right now. But remember, these companies we are buying now, but we have a long-term investing thinking in mind, right? That we are going to be holding these companies for a long haul. So that's why I'm investing in them now. And that's what you always should keep that in mind. All right. So what is the lockup period? That is different than the quiet period. All right. Quiet period is for the company to be quiet. Shh, right. The lockup period is for us investors. Okay. And what is the lockup period? Well, lockup period is an agreement signed by those who own the shares prior to an IPO. So let's say you're a hedge fund manager or you're a big, investor or whatever, and you get to participate pre-IPO. The agreement restricts you, right, from the ability to sell those shares for a period of time, normally 180 days, which is, help me out with the math over here, 6 months, right? 6 times 30 will be 180 days. You are not allowed to sell those shares. You might have, for example, participated in the Snowflake IPO back in 2020, and you would have noticed that you had to wait from September all the way to like maybe October, November, December, and then like January or February before you were able to sell those shares. You had to hold them to them. That is your lockup period. And last but not least, are IPO good investments, guys? Well, a lot of people out there is going to tell you no, right? Because the way that they've been performing for the last couple of years. But when you zoom back all the way back, buying an IPO can be appealing. A block of common stock during an initial public offering has the potential to deliver huge capital gains decades down the line, okay? You're thinking about decades down the line, guy. Even just the annual dividend income of a highly successful company can see the original investment amount given a few decades time. So like I said before, when you're investing in IPOs, think about 5-10 years from now. Anyway, guys, so that was your top 10 most commonly asked questions, right? So like I said, go back to this video. If you have any more questions, make sure you drop them in the comments, because I'll be more than happy to answer them, of course. But like I said, there are advantages and disadvantages of going public. But eventually, almost every single company wants to go public because, it's like a big, hey, we made it. We made it. We are publicly traded. We got investors. We got shareholders. We have a lot of leverage that we can, leverage in the future for more expansion and more, growth and all that. So those are the good things that come from IPOs. Bad things is, sometimes the pricing, it could be a little high. They drop like big time. They could drop big time the price of the stock, depending on sentiment and the hype. Some of the biggest disadvantages as IPO investors. But anyway, let me know what you guys think in the comments below. Have you been burned by any IPOs? Or have you made any money? Leave it in the comments below. As always, guys, I appreciate you guys spending some time with me. And if you have any questions, leave them in the comments. Don't forget to like, to share, and subscribe. And I'll see you on the next video.
I bring up the pain, Rickosaurus the mind. I make the market rain like acid rain. An investing channel you ever known, ya. I take your girl, your house, your money, and leave you broke, son.